Nasdaq 100 index options, 6/17/2012, 10:41 a.m. Pacific Standard Time. Weekly index options, how you can make a fortune trading them as a market maker, both on the calls and the puts. And it's a weekly contract, and the low of these weekly calls over here, they got as low as 33.68, and weeklies has only been open 2 days now. Okay, and you can see that over here in the date column, 6/14, 6/15. So what I want MMTs to understand, that when you look at the mark to market, you look at where this put option over here, which is a 25.75 put, the high is 63.80, and they mark it down to $33. Yes. This side here, you can see clearly that at the strike price of 25.75, it closes at 25.71, Nasdaq 100 right here, up 31 handles, and you can see where this is the best side of the market. And I've already given out the alarms to the MMTs, and I just want them to see this mark down, and then the 25.50 call that's in the money by 21 handles is how they marked to market this weekly contract, index options. Public has a hard time. The highest professional level, they get screwed, because the thing about it is somebody owned these contracts up here. There was volume, there was 2, and there was 3. Not a lot of open interest. There doesn't have to be. But the thing about it is that we are imbalanced. So if we gap up, I'm going to give alarms rises 2 on the 25.50 call. Okay? And I've already given the pricing structure out on the 25.75 put. And once again, we applied the Nasdaq 100 daily movement down here off of these bottoms, and you can clearly see where that resistance level on the Nasdaq 100 is going to have these challenges right up here below 2600 and right up as high as 2625. And if we gap up on the Ben Bernanke news and the worldwide central banking system flooding the system with liquidity, well, then naturally you can come back up and hit these wall of resistance levels. There are going to be huge opportunities in the call and the put structure. I will tell you right now that I will be looking at also the $2,600 call, which is up and out of the money. It doesn't have much of a range. You can see that the open was 12, but the high had a move up to 1790, and then they hit right back, so they got the low of 12, but here's the close, 1630. And the higher that this goes in the shorter term, the more imbalance the put and call side is going to be. So we're going to set alarms on our $2,600 calls up and out of the money. And we've got the complete tree to work with. Here is the Nasdaq 25.75 put, marked down $30.80. Here is the 2600 put that's in the money that we are going to take a look at right here. And you can see the $2,600 put. Now, this is a really good one because this was up at $80, and now they got it marked down to $54. So we're almost 30 handles down here. So this side is marked to market. Now, if they gap up, they're going to gap this 2600 put down, because the 2600 put weekly, it was 73.95. And you can see the mark down here, MMTs. And I'm a master, as you know, and as you will participate in, is that if we gap up tomorrow morning, we can steal these $2,600 put options, and I will be giving the alarms out on the $2,600 puts. Okay? And we'll be working what this $2,600 call will be doing. And if we gap up, we're going to get really inflated, and we can gap down lower over here. So we got two really good put sides to monitor here. And I've already given prices on that one. I'm going to give out prices now on $2,600 put, which is roughly 29 handles in the money. Should this rally continue to go up to those resistance levels, the pricing action level over here will give us a wonderful reward opportunity. And I'm going to start marking down these prices for tomorrow morning. $73.95 on the high, marking it down to $54. $19.40 on the markdown.